Hi, this is Kerry Artak with Wicked Stocks bringing you the daily Tesla report for Tuesday, May 2nd, 2023. Before I click on all the charts, please click like if you would and subscribe to the Wicked Stocks YouTube channel. And speaking of the Wicked Stocks YouTube channel, I don't know if you noticed or not, but over the weekend we hit the 16,000 subscriber mark. We're pretty excited. It's a new milestone for Wicked Stocks. And, we actually couldn't have done it without your support and your loyalty. And to show that, we want to offer you an exclusive opportunity to access our premium membership at an unprecedented discount. Our premium membership includes 2 daily reports. That's the SPY and the Triple Q, just like you see in the Apple and Tesla. 2 individual stock picks that we do every week that you never see on YouTube, and 3 weekly reports that include the NASDAQ 100, S&P 500, and the long bond treasury, the TLT. And so that's all in a single package. Is typically $47 a month, but we're offering 30% off for 24 hours, 30% off your first month. That's only $33 for your first month. It's our biggest sale to date, and it's a great chance for you to take your trading skills to the next level. So remember this coupon code. We're going to put it in the video itself. It's WICKED16, stands for the 16,000 subscribers that you're a part of. WICKED16 at checkout, and you're all set. Anyway, let's jump into the charts. This is the weekly Tesla chart. This is the big picture. Just the only thing I really want to say about this is there is long-term resistance looming overhead at 220.62 that actually is in reach because it's dropping gradually. It's actually in reach, I'm going to say, by the end of June or sooner. And I say that because we are presently testing what had been a targeted 2 to 3 week sell signal, a targeted support at 152.41. So we've come off of this level modestly. We tested it quite a bit last week. It is part of a range of longer term support down to 146.06. You can see down here lower right that can contain selling through May and into June. And from here, we can push into that 220 area and dropping over the next couple of months. Really, realistically, I'd say 5 to 8 weeks. There are definitely some hurdles on the way up. And in fact, it is this channel top as well at 200.89 that precedes 220. That is also significant. So I'm going to say the 200.89 level, which is not updated here upper right, but it's very close, is a 3 to 5 week objective by the end of May, possibly holding above 152.41. So I've been mentioning how if you got short a month ago based on the sell signal down to 152.41, you should have covered that short position. Maybe you had bought puts, maybe you're short the stock, and actually consider going long. If your time horizon is, say, 3 to 5 days or a full week out, you're going long now into the low 170s. This speed line is my focal point. Off that February high, based in part on last week's low at 171.39, you can see. This level, I don't see it today, but over the next few days, it's in reach. At 171.39, if you bought, say, 172 out of the money calls that I was mentioning a few days ago that you might do, you could actually liquidate those calls, reach for 154, 152, 150 out of the money puts that don't expire for at least a full week. You might go a couple weeks out on that. We could trade inside this 171.39 near-term ceiling to the 152.41 midterm floor all the way through next week, perhaps. Ultimately, I am anticipating a settlement above 171.39. Or I don't know about the coming days, but between now and the end of next week, because I just mentioned how we could come off of 171.39 into next week, back into the low 150s again before presumably rotating upward again, and then ultimately closing above the speed line, which is dropping daily. I'll be apprising of its exact location as we move through the week and into next week. It would be a settlement today above 171.39 that would indicate a good low through the month of May. The next 2 to 3 weeks then likely to reach this 200.89 channel top, where we could top out at least on a weekly, possibly monthly basis. So that is sort of the upside if we're looking at the 1 to 2 week time frame and the 3 to 5 week time frame and the 2 month time frame up into the 220s, all in reach above this 152.41 channel bottom that is backed up by a 146.06 5/8 downside Fibonacci that is based on the January low against the February high, this range down here. Now, for the day itself, I still have, actually, I want to find the chart. 166 even is our intraday resistance level. It's our upward pivot point. If we push through 166 even, yes, expecting 168.31. That is still a meaningful channel top. As it converges with 166 even here tomorrow, Wednesday, I'll probably just call it a session containment level. I'm not sure. But in any event, if we push through 166 even today, we certainly could within the day test that 171.39 speed line, where once again we can top out for the week. So if you're long the 172 calls and we test 171.39, you may consider liquidating that position, reversing and buying 152 out of the money puts that don't expire for at least a week. You might go a couple weeks out on that. Inversely, if we were to close above 171.39, if you haven't liquidated the calls, great, hang on, because I think the low 200 area is likely within 2 to 3 weeks. Or if you did liquidate, then reach for 200 out of the money calls that don't expire for at least 3 weeks. That would be my suggestion. Now, downside today, 157.19 is nothing more than a 5/8 downside Fibonacci over the last 3 days only. That is to say, Thursday's low and Friday's high, just 2 days. But it is also consistent with the low from Friday, is just below Friday's low. That itself has a degree of pivot point quality to it. And just below Friday's low is 157.19. So that is our intraday support. We could trade inside the 157.19 floor to 166 even ceiling, intraday floor, intraday ceiling for a good part of the day. If we break 157.19 today, I would expect another test of 152.41, which once again is part of a range down to 146.06 that can absorb selling not only for the day, not only for the week, but as I've been saying, through the month of May and into June, and above which this low 200 area anticipated in the coming weeks. If we were to close below 146.06 today, I don't see it happening. I don't see it happening I don't see it happening at all. And now it may happen. I'm not saying it won't happen, but if it does happen, then we enter another meaningful sell signal that could have longer term implications. But I'm just going to go back to this chart again and show you what I think is realistic. It's really stair step. I don't know if this thing is going to fall apart in a big, bad, ugly way as we move into the third quarter if we close below 146.06. But what I do think is likely is that by the end of June or sooner, we should fall all the way back into the very low 100 area. This full channel extension is a great targeting mechanism, and it also coincides nicely with the 101.81 January low. So yes, closing below 146.06, 3 to 5 week target into the 101.81 region where we actually could double bottom on a longer term basis perhaps. Until then, we are hovering just above a longer term support that we tested last week and above which the low 170s, I'm going to say likely within the week, and the low 200s, possibly by the end of May. And once again, it would be a settlement today above that 171.39 level that would indicate a 2 to 3 week bullish continuation rally to 200.89. I think that pretty much rounds it out. Check out that coupon code. Go to wickedstocks.com. Wicked16 will give you 30% off your first month. Check us out, and I'm just going to leave it at that. You have a great day. We're back tomorrow.